When it comes to evil, huge corporations taking over the world, well, probably the leading contender is Blackrock, an over $20 trillion company that owns stake in most major media companies, owns most major pharmaceutical companies, and sees about 10% of stocks traded worldwide. And now, they're in bed with the Chinese government. Blackrock is a company that is about 34 years old. It was founded by this man. This is Larry Fink. Larry Fink was born into a rich family in 1952. This was LA in the 50s. I mean, we're talking about Audrey Hepburn and Marilyn Monroe. Now, this future Mr. Burns originally wanted to go into politics, but instead of going Frank Underwood, he went full Bobby Axelrod, except older and balder. He got his BA in political science from UCLA and became a member of this completely legitimate secret society, Kappa Beta Phi. I mean, it didn't throw off eyes wide shut vibes at all. Anyway, he was in there with guys like Bear Stearns, former CEO James Kane, former head of the New York Stock Exchange Richard Grasso, and guys like Michael Bloomberg. These were all very rich and powerful people. Fink switched career paths over to banking and real estate. He started the mortgage and bond department over at First Boston. He quickly rose up with his connections and generated over $1 billion for the company. Then a run of bad luck had him losing $1 million in a few months, and they kicked him out on the street.
You're fired.
At age 36, Fink teamed up with a few of his cult buddies at Kappa Beta Phi to start Blackrock. They wanted to focus on risk management. Just 5 years after the formation of the company, it went from being valued at $5 million to having an $8 billion evaluation. Some power struggles were had in the company, and Larry Fink pressured his co-founder, Stephen A. Schwartzman, to sell his stake in the company for $250 million.
We started the business together in around 1988, 89, and they wanted to sell it 4 or 5 years later.
BlackRock started upping its lobbying efforts and government involvement. Fink had developed very powerful connections in Washington, like Timothy Geithner, Secretary of Treasury. During the 2008 financial crisis, he was awarded without competition the contract to oversee the bailout of the major banks. This was an unprecedented level of corruption, especially since they were some of the biggest shareholders in these companies being bailed out. The worst thing is that Larry Fink's mortgage-backed securities were the straw that stirred the drink in the whole fiasco. It's not like he saw the whole thing coming or anything.
The mortgage-backed security, or private label MBS. You've got your average person's mortgage, fixed rate, 30 years, boring, safe, small payoff, right? But when you have thousands of them all bundled together, suddenly the yield goes up, but the risk is still small because, well, they're mortgages. And who the hell doesn't pay their mortgage?
What exactly is the credit rating on this bond?
This bond, gentlemen, is AAA rated.
They became the most powerful company on Wall Street. So when the virus that shall not be named hit in 2020, it was only natural that the Fed would hire them to help manage the purchase of billions of dollars worth of bonds. Now, Larry and the boys have been branching out to other nations. Larry Fink sits on the council of the totally not evil organization, the World Economic Forum, and acquired contracts to manage the EU's regulation of banks, a lot of which they own. I mean, no funny business going on there. Anyway, recently they became the first foreign company to be allowed into China's mutual fund industry. Good for them. The CCP wants control of all businesses operating in their country. Here's an example. Tencent was one of the biggest companies in China. You might know them for their huge stake in video game titles like League of Legends and Fortnite. Anyway, China didn't like how they're expanding into the Western world, and they cracked down hard, with regulations snuffing out their US IPO. This sent a big signal that the CCP overlords are the masters.
Renewed fears that Beijing may roll out more restrictions for private enterprise sent Chinese tech shares to their worst two-day drop since July.
China, Beijing's crackdown continues. Chinese stocks listed in the US suffering, taking a hit again after the Chinese government targeted gaming company.
Tencent, as well as Alibaba and other big national champions of tech, have been under pressure, regulatory pressure from multiple fronts. And in fact, of course, that impacts advertising spending as it relates to those particular industries.
Investors were getting discouraged by these crackdowns at the height of the market sell-off. So Deputy Chairman of China's securities regulator, think the China's version of the SEC, Fang Jinghai met with the execs from Blackrock and Goldman Sachs. They struck a backroom deal to alleviate the investors over China's crackdowns. So at this point, Blackrock goes on a PR spree. They tell the Financial Times, China is underrepresented in investors' global portfolios. They then go and recommend that investors boost allocations 2 to 3 times. And wouldn't you know it? Boom. China approves BlackRock's application to offer mutual funds. In other words, miraculously, BlackRock's long-wanted plan to offer mutual funds in China was approved at the exact same time BlackRock goes on this PR campaign. They became the first foreign company to be allowed into China's mutual fund industry. BlackRock then started investing into Chinese companies like these guys.
We simply can't allow the tools of genocide to continue to be used so readily in our daily lives. Last week, IVPM, the world's leading video surveillance information source, released a 32-page white paper on Hikvision. It noted, and I quote, that the company has been contracted to design, implement, and directly operate Xinjiang surveillance as part of the network of concentration camps where over 1 million Uyghur Muslims are detained until 2040. Hikvision even actively collaborates with the Chinese government as a co-author of national and provincial standards of surveillance and the development of cameras that target Uyghurs. More than 42% of Hikvision is owned by the Chinese state. During the first half of 2021, the company received 223 million RMB in state subsidies, and its chairman, Chen Zhongxian, is a member of the National People's Congress.
Under U.S. law, the government maintains an entity list of these Chinese companies that are barred per se from U.S. commercial or trade relations because of national security or foreign policy concerns. These could be entities that spy or steal trade secrets or repress the Chinese people to a greater degree than usual. These companies are flatly blacklisted from buying U.S. products or selling to U.S. companies. And both companies were among the 28 companies that were added to the entity list for the repression of the Uyghur population. Hikvision advertises itself as the world's largest manufacturer of surveillance technology. iFlyTech is a voice recognition and AI company that is promoted as useful for surveillance. Both companies are at the forefront of China's push to be the world leader in surveillance and AI. Now all this leads to a problem because BlackRock is on the World Economic Forum that is pushing ESG. I'm not going to go into what ESG is on this video, but all you need to know is the S stands for sustainable. The problem is they don't engage in the same behavior for ESG in China, using the excuse that China is a developing economy. And this is a huge issue because they're using the US to offset the ESG agenda. This puts the US on an uneven playing field with China. So as you could guess, Wall Street followed suit. Wall Street was completely uniform in its pro-China sentiment. In the same year that China covered up the plague that ravished global society, Chinese assets went up 43%. Goldman Sachs jumped on board and took full ownership of its Chinese securities in a joint venture.
Talk to me a little bit about China. So you're optimistic longer term in China. Do you ever get any pressure from Washington to grow less fast in China?
We're very committed to building our business in China. I wouldn't say there's direct pressure on us to change our long-term plans to grow our business in China. Is it possible at some point in time something goes on geopolitically between the US and China, and because we're a US company, there's either pressure or directive for us to do certain things differently? Sure, that's a possibility.
Here, take a look at this. This is a propaganda pamphlet that was released. At what point do you call Goldman Sachs and BlackRock what they are? Propaganda arms for the Chinese government. I mean, it's pay to play, let's call it what it is. And right now, BlackRock's former chief of staff, Wally Ademio, is Joe Biden's deputy secretary of Treasury. I mean, he runs all the daily operations of the Treasury Department. Just think about this for a second. He's not the only one. Brian Deese is another former employee from BlackRock who is the head of the National Economic Council.